Ladies and gentlemen, good day and welcome to the Balaji Amines Limited Q4 FY26 earnings conference call. As a reminder, all participant lines will listen only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference has been recorded. I now hand the conference over to Mr. Gagan Dixit from Elara Securities. Thank you, and over to you, sir.
Yes, thank you. Very warm welcome to everyone to discuss Balaji Amines Q4 FY26 results. It is our pleasure to be able to bring to you the management of Balaji Amines Limited, led by Mr. D. Ram Reddy, who is the managing director. We would also like this opportunity to congratulate the management on its excellent set of numbers. So, with these words, I would now hand over the conference to the Balaji Amines management. Over to you, sir.
Thank you, Gagan. Good evening, everyone, and a warm welcome to Balaji Amines Limited's earnings conference call for the fourth quarter and financial year ended March 31st, 2026. I hope all of you have had an opportunity to go through our financial results, press release, and investor presentation, which have been uploaded on the stock exchange and on our company website. Financial year 2026 was a year of steady performance for Balaji Amines. Despite certain external challenges during the year, the company was able to maintain operational stability, improve profitability, and continue progress on its strategic growth projects. The performance during the quarter was supported by stable demand across the key segments, better operating performance, improved cost absorption, and continued contribution from our integrated manufacturing model. Coming to the consolidated financial performance for the quarter, our total revenue for Q4 FY26 stood at 403 crore as compared to rupees 361 crore in Q4 FY25, registering a year-on-year growth of around 12%. Our consolidated EBITDA for Q4 FY26 stood at rupees 102 crore as compared to rupees 68 crore in Q4 FY25. EBITDA margin for the quarter stood at 25% compared to 19% in Q4 FY25 and 18% in Q3 FY26. The improvement in margins was mainly supported by better operating leverage, stable raw material conditions, prudent inventory planning, improved cost efficiencies, and a favorable product mix. Profit after tax for Q4 FY26 stood at rupees 65 crore compared to rupees 40 crore in Q4 FY25 and rupees 31 crore in Q3 FY26. Diluted EPS for the quarter stood at rupees 19.99 per equity share compared to rupees 9.49 per equity share in Q3 FY26. On a standalone basis, Balaji Amines continues to remain a zero-debt company, which reflects our strong financial discipline and prudent approach towards capital management. Moving to the full year performance, consolidated total revenue for FY26 stood at rupees 1,454 crore as compared to rupees 1,430 crore in FY25. Consolidated EBITDA for the year stood at rupees 294 crore as compared to rupees 265 crore in FY25, registering a growth of around 11%. EBITDA margin improved to 20% in FY26 from 19% in FY25. Consolidated PAT for FY26 stood rupees 169 crore as compared to rupees 159 crore in FY25, reflecting a growth of around 7%. PAT margin for the year stood at 12% as against 11% in FY25. Our consolidated balance sheet continues to remain strong. As of March 2026, consolidated net worth stood at rupees 2,152 crore. as compared to rupees 2,018 crore in March 2025. Consolidated debt stood at rupees 133 crore, mainly on account of ongoing expansion related activities. During FY26, the company generated rupees 184 crore of net cash from operating activities. Cash flow from investing activities stood at negative rupees 344 crore, reflecting investments towards ongoing growth projects. On the operational front, total consolidated sales volume for Q4 FY26 stood at 27,341 MT as compared to 25,871 MT in Q4 FY25. Within this, amines volume stood at 7,746 metric tons. Amines derivatives volume stood at 8,935 metric tons, and specialty chemicals volume stood at 10,660 metric tons. Overall volume remained stable, supported by consistent demand across key end user industries such as pharmaceuticals, agrochemicals, solvents, and other specialty chemical applications. During the quarter, production was briefly impacted in March 2026 due to an external geopolitical situation. However, the company was able to manage the disruption effectively through prudent inventory planning and uninterrupted availability of raw materials. This enabled us to maintain supplies to customers and ensure that plant operations remained stable. This performance once again highlights the strength of our integrated manufacturing model, supply chain capabilities, and execution discipline. Demand conditions across certain end user industries remained stable during the quarter. Our established amine derivatives and specialty chemicals businesses continue to provide a stable operating base. Alongside this, the company continued to make progress on its strategic priorities, including the ramp-up of electronic-grade DMC, DMF, and other products. These products are expected to strengthen our presence in high-value segments and remain an important part of our long-term growth strategy. Let me now provide an update on our three projects. The dimethyl ether, a DME plant at Unit 4 is expected to be commissioned during the first quarter of FY27. DME has applications in the aerosol industry and can also be used as a replacement for LPG in industrial and commercial applications. Our N-methylmorpholine or NMM project with a capacity of 5,000 TPA is currently under execution and is expected to be commissioned during FY27. The improved process-based acetonitrile or ACN plant is also under execution and is expected to be commissioned during the second quarter of FY27. All these projects are progressing as planned and are being funded through internal accruals. Coming to Balaji Specialty Chemicals Limited, the company is under a major expansion of around 750 crore in a phased manner. This investment is being made for a wide range of products including hydrogen cyanide, sodium cyanide, EDTA, EDTA, 2NA, and other advanced chemical products. The Industrial Energy and Labour Department, Government of Maharashtra, has granted mega project status to this expansion under the Package Scheme of Incentives 2019. At Unit 1, the brownfield project for EDA-based value-added products including data, PIP, AEEA, and AEP is expected to be commissioned during the first half of FY27. At Unit 2, which is the greenfield project at MIDC Chincholi, erection and installation work is currently in progress. This project is proposed for the manufacture of HCN, NaCN, EDTA, and EDTA 2NA and is expected to be commissioned during Q4 FY27. These projects are strategically important for the company as they will expand our specialty chemicals portfolio, increase our presence in import substitution products, and create a stronger platform for future growth. More importantly, they are aligned with our broader strategy of moving towards value-added products, improving integration, and enhancing long-term profitability. Strategically, our focus remains on three broad areas. First, we all continue to strengthen our core amines and derivatives business by improving capacity utilization, operating efficiency, and product mix. Second, we are increasing our presence in high-value specialty chemicals and electronic-grade products, which cater to industries such as pharmaceuticals, agrochemicals, water treatment, refineries, EV battery chemicals, paints, dyes, and other industrial applications. Third, we remain focused on import substitution and indigenous manufacturing technology, which have been important strengths for Balaji Amines over the years. Looking ahead, we enter FY27 with a positive but measured outlook. Our focus will be on improving utilization across plants, completing ongoing projects on schedule, strengthening operating leverage, and scaling up new products in a disciplined manner. The commissioning of DME, NMM, ACN, and the expansion projects of Balaji Specialty Chemicals will be important milestones over the coming quarters. While we remain watchful of raw material prices, global demand conditions, and geopolitical developments, we believe Balaji Amines is well placed for gradual growth. This confidence is backed by our integrated manufacturing model, diversified product portfolio, strong customer relationships, expanding specialty chemicals platform, and disciplined balance sheet approach. With this, I would like to thank everyone for joining the call. We can now open the floor for questions. Thank you.
Thank you, sir. We'll now begin the question and answer session. Anyone who wishes to ask question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Priyank Chheda from Volume Capital. Please go ahead.
Yeah, hi, sir. Thank you for the opportunity. So, just a broader question, looking at your expansion plan. Say we are at a capacity at the standalone company at say 2.93 lakh tons, metric tons, 293,000 metric tons. And then when we were to see the quarterly volumes, we roughly at a company level operate at 35-40% utilization. So just wanted to understand why would we continue further expansions despite remaining at such a low utilization, and which would be those products where the utilizations would be furthermore low, and if you can highlight few products where the utilizations are higher than the company average.
Thank you, Priya. See, the new projects, they are not the same products increasing the capacity. They are all new products. Like we are talking about the dimethyl ether, which is an alternate to the LPG. So this we have planned about 4-5 years back by contacting the Niti Aayog. So that product we will be commissioning probably maybe in this month only. And other thing is acetonitrile, which was, because that was the old technology, we have just improved the technology. And you are talking about the utilization. Yes, only 1 or 2 plants are utilized very lower capacity, like DMF and like butylamines, like battery chemicals, DMC and all, because the battery manufacturers are yet to tough. So that's the reason those plants. So we are gearing up and we are getting ready for the tomorrow's requirements.
Got it. And the second question on, given the supply chain disruptions that are happening globally, And then we have seen those realization getting benefited for you in this quarter. And so would be also the profit margins that reflects the spreads improving on the EBITDA level. If you can just highlight what is the average price hikes that you would have taken in the current quarter, and what is the realization growth that we should think of it in the ongoing months and the quarters till the time the disruption remains globally? What would be that quantum of price hikes that you are looking at it?
See, these prices, you are aware that because of the current geopolitical situation, most of the raw materials, how sometimes it is doubled, even 3 times also, 2.5 times of its regular prices. So because of some of the plants might have shut down because of this situation, we got the proper offtake from the customers for this current quarter, and because of our proper inventory management, we could be in a position to maintain these profit margins, and we give the guidance in coming quarters also, because of the new plants or new products are coming up. I hope that the volume growth should be in the coming financial year. It may not be this year, maybe partly they are coming up, but I am talking about the 2027 end. There should be minimum 25 to 30% volume growth should be there from the current volumes, and the EBITDAs should be sustainable between 22 to 23% on the total sales.
Got it. And one last question on methyl amines. So one of the large metformin customer manufacturers has backward integrated. Would it be possible to quantify what kind of risk do we run on this one large customer in terms of our capacity as a percentage?
See, which is for you are feeling it is a large manufacturers, but for us, what we have seen is their requirement of the dimethylamine hydrochloride maybe about 15 to 20% of the total our outflow. And secondly, even today also they are buying, even this month also they are buying from us. I don't know where from you got, and maybe they have some problems, or maybe our cost is lesser than their cost of production. So even today also they are buying from us.
Got it. Wonderful. Thank you, sir.
Welcome.
Thank you. The next question is from the line of Parikshit Gujarati from Nivesha. Please go ahead.
Hello, am I audible?
Yes, sir, you are. Please go ahead, sir. Thank you.
So I had just 2 questions. Earlier, the management guided that they are targeting 2,000 crore type of revenue by FY28, in which majorly Balaji Specialty Chemical will contribute and DME will contribute. So on that side, I had a question. See, in DME, we still have to get the approvals from the government side. So there's a big, so that is a big policy risk there. And on the Balaji Specialty side, the end market demand is still growing in like single digit. So what is the reason that we are doing such a big capex? And we announced this capex 2 years ago also, and we haven't been able to ramp up very fast. So these are the questions I would like to ask.
See, number one, this is regarding the dimethyl ether approvals. See, there is nothing is pending for the manufacturing point of view. They are already having the permission for the manufacturing. Only thing is, for the transportation part of the approvals have already been on the place. So that's the reason we are going ahead. Plant is already fully constructed. Just commissioning is going on. Now the commissioning activities are going on. And as regards the consumption of DME, country presently India is importing almost 25 to 40% of the LPG from outside country. And we are talking about only 100,000, and that is 1 lakh tons capacity we are putting up. And we are, as I said, we are targeting only aerosol and commercial establishments. You are aware that the government has increased almost 1,000 rupees per cylinder recently. It's about 10 days back only they increased for the commercial cylinders. So definitely we think that we should be in a position to continue this project and very profitably. Second thing, as regards the Balaji specialty chemicals, I don't know where from you got the figures. Like the new products, value-added products, which I have mentioned in my speech, that is TETA, TEPA, and AEP. These are all products having very good demand in the world market. For the TETA, nobody is making in the country. So there is a good demand. And like other products like Greenfield, hydrogen cyanide and sodium cyanide, there is a good demand in the country as well as outside country also.
So sir, are you still on, so you are saying that we will be able to reach 3,000 crore revenue by FY28?
Definitely. You are not heard fully. I said if situation goes like this, we will be definitely reaching 3,000 crores in 2028.
Okay. And so on the DME side, I wanted to ask, like that's the last question. So what will be the amount of volume of DME which India will require? And is there import risk from China that China will dump at lower prices in India?
No, as of now, China has not come to the India, because this being in the gas farm, I don't think there will be much competition from the outside country. And you asked about what is the, see, I am saying, when I say this is the alternate to the LPG. So
right.
Wherever the LPG is used, there we can use this. Like aerosol market, that itself is more than 40 to 50,000 tons currently using the other gases. So there it is easy to target by giving this DME. And the same way commercial establishment, there are many commercial establishments like baking industry, bulb industry, ceramic industry. They're all depending on the natural gas or the LPG, where we can replace this. Specifically in the current situation, there is a tremendous shortage of the LPG. So I don't think there should be any problem.
Okay, so you are saying that from the Q1 only you will be start supplying DME to the government, right?
Yes.
Okay, got it.
Thank you. The next question is from the line of Nilesh Kuge from HDFC Securities. Please go ahead.
Yeah, good afternoon, sir. My first question is on our consolidated numbers. So there is a sharp reduction in other expenses in consolidated numbers. What are the steps or the efforts that we have taken that to reduce it, and what number we should build in for FY27 in our for modeling purpose?
I didn't understand.
See, sir, other expenses. Other expenses
probably
in consolidated.
Because of the specialty chemicals, because the subsidiary is not working in full position because of the activities for the modification. It is working 10 days working and 15 days is working for the modifications. Repairs are going on, which goes into the expenses, which going for the modifications definitely goes into the capitalization.
Okay. So this is the impact. So can we work out with the quarter 3 number as a normal number and the other expenses for FY27?
If you have specific numbers you want in the other than the what we have presented,
For
you can
example,
drop a mail.
sure, sir. Sure, sir. I will do that.
Drop a mail to CS. We'll definitely
Yeah.
try to give you your answer to your question.
Yeah. Okay, sir. Okay. And the second question, in the subsidiary number, there is a growth at top line. However, at a gross level, the rise in raw material cost is very steep. Any specific reason? I mean, in terms of ethylene diamine prices have increased or something like that?
Yeah, there's a increase in the raw material prices, like monoethanolamine. It's almost 3 times than the normal.
Okay. And that's why our subsidiary, the kind of gross margins are much lower compared to last quarter.
Yeah, because see, we cannot consider these numbers, Nilesh. The reason is it's already working. 15 days, 20 days, times even 10 days, it has worked. Only thing is, after these modifications from the third quarter onwards, you will see the real figures of this existing plant.
Okay. So meanwhile, we can take the annual number or maybe the 6-monthly number as a benchmark. Is that right understanding, sir? Instead of quarterly numbers?
No, this is very difficult to compare because almost the 9 to 12 months it is on the modifications type of things only happening. You cannot consider them as a benchmark, right?
Okay, sir. And so the last question, what are the prices of EDA data in Q4, particularly in the month of March, and what are the prices now?
It's between 300, 280 to 300, even it went up to 400 also in the smaller quantities.
Okay. This is your talking about the Q4 number, average Q4 number.
The average Q4 number about 300, and today it is about 270, 280. Yeah.
Okay. So there is a dip. Okay. Okay. Thanks a lot. Thanks, sir. Thank you, sir, and all the best, sir.
Thank you. The next question is from the line of Ritesh Chera from Lucky Investment. Please go ahead.
Yeah, so my first question is, what is the arrangements for raw materials, especially methanol and ammonia on the standalone side? And then on the EDA side, how are we positioned on the raw material and continuation of manufacturing? Hello?
Yeah. Yes. See,
so that's my first question on the raw material, yeah.
Raw materials we are regularly buying. For the ammonia, there is no problem. Only prices are up, but availability is no problem as of now. We are getting regularly. Methanol is also, there is no problem. Only thing is prices and volatility in the pricing. So one need to alert every time. See, earlier what we should do when you buy order today and for the entire month you should keep quiet. But now we need to be alert. Every 3 days, 4 days we are observing what is happening in the market and we are buying in the shorter quantities for a shorter period.
So the availability there is sufficient arrangement to make sure that the plant which was running at 25,000 tons volume for all these last 3-4, right, so up to 20,000 per quarter. So you have necessary arrangement to make sure that at least plant runs at the run rate what you were always doing, right?
Yes, you are right.
Okay. My second question is, I didn't understand your 30% volume growth guidance. So what will drive that 30% volume growth? And are you prepared from the raw material side to deliver that 30% growth?
Yeah, the 20 to 30% volume growth I said because considering the 3 new plants, one is acetonitrile, dimethyl ether, and your NMM. These 3 new plants are coming up, and even the battery industries, which is yet to start. We hope that in the current financial year they will start, and next financial they will stable. So all these, considering all these, I have taken very conservative number of 30% capacity, 30% volume growth.
Okay. My next question is on the ethylamine portfolio side and the EDA portfolio side. If you could tell us the pricing that you experienced in March and the pricing that you're experiencing now, or the spreads which you're experiencing in March and the spreads which you're experiencing now, are they holding on? Are there any changes?
See, there is a change. There was a change in the March also 3-4 times. Even now also every 3-4 days there is a change. Even if I give you some numbers today, the price is going on this. That will not work for your calculations because because of this current geopolitical situation, every 2 days, every 3 days there is a change in the prices. The only thing is one need to be very alert, both the sides, sales as well as from the procuring the raw material side. So then only we should be in a position to maintain the margins what we have assured.
Okay, and my last question is on the 3 new products which you referred to, which is acetonitrile, dimethyl ether, and the one more other product. What is the usual, what is the pricing range that they are at? So they are at the 200 plus range or 300 plus range pricing. What is it?
See, one is this is about 100 plus 120 rupees is the dimethyl ether. What we are thinking around 100 rupees, basing on the current situation, and acetonitrile is about 240 rupees today's situation, and NMM is also about 250 to 300 rupees.
Okay, sir. Thank you. If I have more questions, I'll come back to you. Thank you very much.
Thank you.
Thank you. The next question is from the line of Bhagwat from Prosperity Wealth Management Private Limited. Please go ahead.
Thank you for the opportunity. My question is regarding the dimethyl ether plant. Could you please comment on the expected utilization of the plant along with the potential revenue and EBITDA margin for current year and next year, please?
This is a very difficult question, Mr. Bhagwat. Yeah, utilization, I can say if the situation goes like this, we can utilize fully. Only thing is we are waiting for the permission on the transportation, road transport permission we are applied to the government and we are following up. We expect that in a month's time that will come. And production, yes, we will continue to the production till what we have the storages, we fill up our storages. And margins, it is very difficult to say. Only we can say today's margins, okay, with the line of other chemicals, it is there. But tomorrow it is very difficult to predict what will happen at the raw material front.
So if we get the road transportation permission, so since the time we can utilize the plant fully, or how is it?
We see current financial year maybe about 30 to 40% we should be in a position to utilize, because there will be some teething problems in the production. Even it's and also using the new product, this being the first time in the country, they are also adjusting to the product also will take some time. By end of the year we should reach to 50 to 60% capacity, and the coming years it will go to 80 to 90%.
Okay, at 100% utilization, what is the potential revenue?
Which I am telling you today's price, even if you take conservatively 80-90 rupees also, our capacity is about 100,000 tons. That is, even if you take 80%, 80,000 tons. You can calculate.
Okay. And the margin that you have mentioned is similar to the other chemical margin, that's around 20 to 23% approximately?
Today's situation.
Okay. That's around 22%.
EBITDA is 22.
Okay. Thank you for the answers. Thank you so much.
Thank you. The next question is from the line of Anil Shah from Insightful Investment. Please go ahead.
Yes, hi. Just wanted to know what would be your capex that is still remaining in the standalone for these 3 products, that is DME, NMM and ACN for this year?
I think hardly 20 crores. must be there. We already spent almost all the money. We paid the advance for some of the equipment. They are on the way. Only balance is there maybe 20 crores.
For all three products combined, you're saying about 20 crores is balance,
Yes.
right?
Yes.
Correct. And from a subsidiary perspective, what is the likely capex this year that we will be doing? Balaji Specialty?
It's total 750 crores. In first phase, we'll be spending about 350 to 400 crores.
Okay. Out of which, how much will be this year?
This year is about, we already spent more than 110 crores. We'll be spending about another 250 crores this current year.
Okay. So basically, we are looking at anywhere between 250 to 275 crores of capex combined on a consolidated basis this year.
Yeah, 275 to 290.
275 to 290. Just to touch upon in terms of, the DME, obviously, while we await the road transport permission, have we already been approached by prospective buyers and, is there a volume understanding agreement which has been signed, or is it all going to go on spot, or how does this work? If you could just explain a bit.
We approached almost all the customers who are equivalent to our capacity. The only thing is, this being a gas, we cannot provide them the sample. People are asking for the sample. Now we ordered about 100 cylinders of 500 kg each. Those will be sending one cylinder to each customer, even though they are the bulk consumers. They will be testing with 500 kg. And after that testing, once the trials are done successfully, then they will be placing the order for bulk requirement, of course, after receipt of the transport permission.
Agreed. So more likely than not, we should see the actual booked revenues only probably in the second half of the fiscal.
Yes.
Because permission you said itself will take a month.
I have not considered anything in this month. I have not considered anything. If you heard my earlier answer to the question, I told them that there will be 20 to 30% volume growth in the next financial year, considering all these products.
I thought you said 30 to 40% utilization for DME in FY27 itself, right? 30 to 40% utilization.
Yes, but conservatively I said all the three products like acetonitrile, partly we are selling, but when that comes, that sales will increase. And these two products are new. Again, one is the NMM, N-methyl morpholin, and this ether. Also, I see any product when you go first time in the country, there are two types of the teething problem. One is our side to get the quality of the customer's specifications. Number two, their acquaintance for the product being manufactured first time in the country. When we talk about the alternate to the product one they are using already.
Okay.
So there also they will take some time. Considering all these things, we said this year it will be very marginal, but next financial year we'll definitely see 60-70% of the utilization should be there for this product.
So for this particular year, then, what kind of volume growth and what kind of revenue growth? More important is volume because, value growth is obviously subject to a lot of raw material prices moving up and down. So what kind of volume growth for this year as a company that we should be looking at? Because I appreciate the fact that DME, ACN and NMM will take its time and you're not factoring in too much for this year, and that's understandable. But if I
assume it will be 10 to 15% volume growth should be there.
10 to 15% volume growth, and this is for consolidated part, right?
Yes.
Consolidated.
Yes.
Okay. And in terms of the last question, sir, in terms of the battery chemical unit, how much would we have spent, and is that unit been commercially operation in terms of or it's still not we are not showing it as commercially operating?
It's already started the production, but not for the battery chemicals. We are giving to the other sectors also. There is some consumption like agro and pharma. So
Okay.
it is running at 20 to 25% capacity. The production is going on. Because these battery people, I don't know, everybody is talking this month, next month. Somebody said that from April onwards will come into the full swing. So we will have to wait. The moment they start, then we will be in a position to utilize our capacity also.
Yeah, I understand that. So just sorry, I'm just extending the same question. It's not a new question, but has a product been approved by the respective battery manufacturers and, in terms of the trial runs, in terms of samples, all that part has been done. It's just the fact that they need to start commercial orders to be placed. Is that correct?
Yes, they have placed, some of the people placed commercial also. Some 100 tons like that, some of the people they placed. They said that this is not exactly, I'll tell you two things. One is the battery based chemicals and other is the electrolytes. Our product goes in the battery chemical electrolytes.
Okay.
People who are buying from us presently, who bought about 150 tons, they said that Indian companies are not yet ready. We are selling this outside country. They bought our chemical, they made a electrolyte and they sold it. They are selling it outside country.
Got it. And we are hoping for some better utilization in that particular segment.
Yes. Definitely.
Okay, sir. Thanks. I'll join the queue. Thank you so much.
You're welcome, Bhagat.
Thank you. The next question is from the line of Rajiv Rupani, an individual investor. Please go ahead.
Yes, sir. Congratulations on a good set of numbers. Sir, my first question is regarding increase of stake in BSE from 51% to a higher level. So I would appreciate I have been asking this question since last few Concalls. So if we can increase our stake in BSE from 51% to a higher level, it would be good. Could you update us, please?
See, आप और हम दोनों बोलने से नहीं होता है. This is there are both the boards are involved, both the shareholders are involved. So they will take at appropriate time. Both the boards will take the decisions and will take place.
So are we going for a IPO or are we going to increase the stake? Any hint can you give us?
It's too early, Raju, to discuss. But why the IPO is postponed? Because we want to come with all the products into the market. Then we will talk about what action to be taken.
Okay. And sir, my next question was this: the greenfield and brownfield capex. I had come to you and we did a plant visit in June 23. So now it's been 3 years. Not even the phase 1 of the greenfield capex has started. So is there a delay of more than a year in this?
No. The things what we said in 2023, they are already in the production, like ethylamine and the DMC and all. Those products are already in the production. Now the modifications we have taken last year only, the modification decision for the Balaji Specialty Chemicals, one which is going on. You yourself was telling that you did not visit from 2023. How can you say that what is happening at plant level? Once you visit, you will understand what quantum of work is involved, what type of machinery is involved. Once you visit, probably by this month end or next month mid, we will be inviting the investor stakeholders for the visit of the witness the expansions going on.
Okay. My next question was on anti-dumping duty on DMF and EDA. Any update on that?
DMF we have not yet applied. That old case is still there. And EDA, it was at final stage, but because of this geopolitical situation, government has withheld many products. They made it duty free. You forget about the regular duty anti-dumping. So we will have to wait till end of June because those orders given by the Government of India for exemption of certain products is valid up to, I think, end of June. Probably after that, we will come to know status of all these cases.
I'll get back in the queue.
Thank you. We take this as the last question. I now hand the conference over to Mr. Govind, sir. Thank you, and over to you.
Yeah, thanks for all the participants, and special thanks to the Balaji Amines management for sharing their views on the company's fourth quarter fiscal year 2020 performance. We take then this opportunity to thank Mr. Ram Reddy and his team once again. Would you like to make any closing comments, sir?
Yes, thank you. Thank you, Gagan. I would like to thank you, all the participants, all the stakeholders who are well-wishers, who are the shareholders, to showing the interest on our company. Definitely, we will not let you down. I once again assure you all. And as I said, we will be inviting whoever is interested to witness the expansions going on. So, thank you once again. Thank you.
Thank you. On behalf of Elara Securities, that concludes this conference. Thank you for joining us. You may now disconnect your lines.